This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. Today in the show, I have Bucky Isaacson. He is one of the early pioneers of managed futures. In fact, in 1969, he helped to develop one of the first computerized trading systems. He's been involved in the managed futures business ever since, particularly in Asia, and is a prominent leader in the U.S. futures industry. Bucky brings wisdom. Our conversation today, however, is most likely going to benefit fund managers, whether new or established. Bucky brings great insights if you want to manage money for other clients. And a caveat, if you listen to our conversation and you have no interest in managing money for other clients, the way Bucky thinks about marketing and reaching people will help you no matter what your interest is in. I hope you enjoy this conversation. You know, it's my perspective. I think I told you we talked a couple weeks ago, I gave about 40 plus presentations to mutual funds, hedge funds, sovereign wealth funds in Asia last year, in several events, big events too. But my feeling on all these events around the world, they're so fractured. You know, it used to be back in the day that if you went to the Futures Industry Association conference, you would see really quality speakers giving good info. Now, it's such, you just don't know where to turn. You know, if somebody's going to get on a plane and go somewhere, it's so splintered to me, it seems like except back in the day, in the MFA and the FIA, you really kind of, you knew there was going to be some quality speakers. But so I guess it sounds like you're tackling that problem.
What I think we've found is we don't have a lot of competition because they don't go after the emerging managers because they can't do it cheap enough to attract them. So we don't have a profit motive in these things, and we don't make any money on them. And $600, a new manager, whether he's hedge fund or a CTA, can afford to come to it. But I know the one game in Monaco, they ended up with only 400 people. And to go there for a 3-day event, by the time you get done paying the $2,500 plus, you know, you're not going to get a hotel room there for less than $800 or $900 a night. Gets to be a big expense.
Yeah, I think sometimes, and I'm going to go into that today with you, I think sometimes would-be traders don't think of the totality of all the issues. Maybe they develop their trading system and then they wake up to, hey, hold on, there's quite a few other things that you have to do to be successful. Yeah, well,
I think they're businessmen. They're not businessmen, they're traders, and they expect to, if they have a good system or they have a good strategy, they think, oh, God, the world's going to be the path to my door. And I think the other thing I see at a lot of our conferences anyway and throughout the business is that once they get to the conference, most of them are so inept at networking and selling. It's unbelievable.
Yeah, I think, and I say this affectionately, there's a healthy dose of introversion, and perhaps for some fantastic traders, it's probably a healthy dose of Asperger's. And I don't say that in a derogatory way at all. It's the truth.
Yeah. Well, you know, the other interesting thing is when you mention the FIA, because those were the glory days when you used to go there and the Board of Trade and the Merc had competing party nights and everything else. And, you know, there's fewer than 100 FCMs registered now.
Let me take a step back, Bucky. So I don't know your full background. And I do know that I've seen some information, fairly general. Now, you've been in this space, this managed futures space, before it was called managed futures. We're talking back to the late 1960s. And the line that I saw is that you were involved with a group that was developing a computerized trading system in 1969. Would you add some color to that?
What had happened in my background is I'm from Chicago. I had gone to Michigan State University. I was an assistant golf pro is the way I made my way through college. It was a wealthy club outside of Chicago that I worked at. One of the members said, you're never going to play well enough to make the tour, so come to work for me. And he sent me out to the West Coast. He owned a company that made the flavors for Kool-Aid. and the perfumes were Revlon. After a couple of years, this was probably 68, somewhere in there, he wanted me to come back to Chicago. I didn't want to come back to Chicago. My next door neighbor was a guy named Chet Conrad and Keith Campbell. And we were both, all three of us were not doing anything. And then there was an ad in the Palo Alto Times saying that we're looking for someone to open a branch office of a futures firm in the Bay Area, and there was a company called Lincolnwood, and I entered the ad, and it was almost like a franchise. For $1,200, I want to say, we could open the branch office for Lincolnwood, which was a commodity firm, and Keith, Chet, and I had a partnership. 72, Chet was the analyst, Keith and I were kind of the marketing guys. 72 or 73, we hit the sugar market. Went from 6 cents to 60 cents. We had a bunch of clients in there. And then right after that, it was beans in the teens. The soybeans went way up, and it was a series of very strong markets. And we went, and after we had that, we didn't know what to do with the money because we made people a lot of money. And so we somehow, one of us or two of us, looked at trading algorithms and simple moving average systems, and we put them together and put one together and then rolled that money into partnerships. And that was probably 74 maybe when that all started.
And that was literally one of the earliest incarnations of a managed futures firm, wasn't it?
Yeah, it was. And then Keith's parents got sick. I want to say he moved back to Baltimore. Chet, we all had made pretty good money. Chet moved to Reno, Lake Tahoe, bought a casino up there, and prospered up there. And Keith Campbell has prospered. And then what had happened with the rest of my stuff is that in like 76 or 77, somewhere in there, 75, the guy who was the first chairman of the CFTC was from out here, and I had met him, and I was one of the first CTAs registered under that category and the first FCMs registered. My distribution network was people that called themselves financial planners. I put together a series of partnerships, and they registered as APs of my FCM at that time, and they also registered as CPOs. So they got paid a piece of the management fees and the piece of the brokerage commissions. And I guess 85, 86, I got to the point where I was managing about $200 million, $250 million. But the distribution network basically sold tax shelters. Mine wasn't tax incentive, but the distribution network went away because they went to selling mutual funds, annuities, that type of thing. Along the way, in maybe 1979, 1980, there were about 8 of us, Frank Pusateri, myself, a guy named Ted Topdy, Mark Mitchell, Leon and Joy Rose. We really had Leon and Joy put together the first MAR conference because he had started MAR in Chicago. And at that same conference, we had the initial meeting of what at that time was called we named it the National Association of Futures Trading Advisors, which ended up morphing eventually into MFA. And about the same time, I got to be the first non-FCM member of the FIA board. I was one of the original 8 or 9 guys, 10 guys that put together the NFA, the original board and the original executive committee, and stayed on that for about 13 years, and a bunch of exchange committees. And along the way, was lucky enough to go testify for the industry in House and Senate hearings. So it's been a great ride for me.
Let me ask you, so you give, a lot of people today, a lot of startup CTAs, startup fund managers, they'll call you and they want to talk shop. They want to pick your brain. They want to kind of see how things, every landscape and every generation is always unfolding a little bit differently. But I would think one of the key things that a would-be manager, a new trader, perhaps an underfunded trader can get from you is attitude. And so, I hear it in you. So you make it sound like, hey, You just weave between these things seamlessly. However, what was the attitude that you have? You started with Golf Pro, okay, and then you weave through this career. What was the attitude that you had that was enabling you to have this self-confidence to just keep plugging along? What was it about your thinking?
Yeah, I think it was more luck than anything else. I think it's much more difficult to get started these days than it was back then. I mean, when I started and with Keith and Chet, there was really no CTAs at that point. Richard Donchen was the first guy. I think he put together a moving average system in 1948. So all of a sudden you started seeing regulations come in starting about 75 or 76 with CFTC. And at that point, I had a vested stake in the industry. I had my own business. I was fortunate because the FCM business was a lot different. It was profitable, and all of a sudden this managed futures thing was something they kind of wanted to be involved in. And I've always been kind of entrepreneurial, and I was just lucky to be in the right place at the right time, and all these things just kind of came along, and I got to know a lot of people in the business. Most of the people in the business, which was really a blessing. It was a different time, and it was exciting.
Yeah, I was going to say, is there anything you might want to share? I don't want to throw a name out because you frankly know everybody. So I don't know if there's anyone off the top of your head that you think would be interesting. You've already shared some insights about Keith Campbell, but literally, I mean, is there anybody in the managed future space in the last 20, 30 years that you did not have a chance to really get to know fairly well?
Well, the managed future space is growing so much, but most of the pioneers, most of the guys that are in Jack Schwager's book, or we all kind of grew up together, and it was an exciting time for me anyway, because there weren't as many markets. The markets weren't as efficient as they are now. There wasn't electronic trading. It was not necessarily easier to make money, but trend following systems worked a lot better because the trends were more clearly defined than they are today, or they lasted longer. And it wasn't easier to make money, but it was different ways to make money, I guess. But the one thing I think that stayed the same over that period of time is that the number of managers come out, like we talked earlier, managers come out and they expect that if a system works, they're going to have people beating the path to their door. And that's not true anymore. It's a sophisticated world out there that allocates money. And when managers call, I tell them the two most important things you have to do are, one, beside being a good trader, is number one, you have to look at, write a marketing business plan. So you know what you're doing in your approach to marketing. And number two, find out to make a budget for your business plan so that you know how much money you have to spend and how much time you can be on the road. So if you're a new manager, does it make sense to spend $5,000 or $6,000 to go down to MFA in Florida? Or are you better off spending that $5,000 making 5 or 6 trips a year to New York and going to meet people one-on-one where you're going to get better coverage?
Let me add something to that point. So I've seen you make the comment about Europe and Asia. It's a one-on-one place. I think it's one-on-one in America still too. But, I don't run a fund, but I know something about marketing, and you're so accurate. And I can speak to Asia, at least in the last year, to be on the ground and shaking someone's hand and looking at them eye to eye, perhaps even going to drink some hard liquor that one doesn't really want to drink because that's the custom. There's a whole different ball game to that versus not doing it. And I think sometimes in this internet age, a would-be trader, perhaps a good trader with a fantastic system, will get lost in his own head and doesn't think he has to go do that. I'm not saying it's cheap, as you've noted, don't want to do like a week trip in Asia, flying business class and getting a decent place to stay. You can spend maybe 15, 20 grand. True enough. But you got to do this if you want to play the game. If this is the game that one is entered, you've got to do these things, don't you?
Well, I think it's that way in the places I go to in Europe, Asia, South America. I think that doing business in those places, no matter what the business, is much more relationship driven than in the States. I think in the States doing business is very bottom line driven. There's a relationship component involved, but it's not as strong as in those other areas. And I tell the story that I was doing some consulting work with Mitsubishi, and they would call me over there, and they would a manager would be making a presentation to one of the fellows, Japanese fellows, and traditionally they would have a laptop up and they would be zipping through their presentation. And no matter what the country in Asia, even though we think that they speak fluent English, sometimes the words don't translate exactly. So I find that, for example, in Asia, what works better is leave the laptop at home, put out your PowerPoint, if that's what you're using, in hard copy, so the people can go through it as you're going through it and make notes on that hard copy for questions later on. So I'm over there with this manager, and he's going through the laptop, and he leaves, and the fellow from Mitsubishi calls me aside and says, "You know, Bucky, that's a nice laptop. Do you know where I could buy one of those?" So, they completely miss how to do it. The other thing is that I just think generally, and you live in Asia, so Americans don't travel very well. We tend to look down on every other country in the world and every other culture in the world. And we go to these places and we get off the plane and we want to go to a Hilton or a Sheraton, and we don't want to eat the local food, and we don't pay attention to the local culture. And each country, as you know, Japan has different business practices than Korea, certainly different than in the Philippines, different than in Singapore. And you have to take the time to learn what those business practices are in each place before you go over there.
Yeah, let me add some real specific color. When you talk about hotels, I can assure anyone and everyone that the Shangri-La chain in Asia is worth staying at. I can assure you that. And there's more Michelin-rated star restaurants in Japan than any other country.
Yeah, exactly. And when you go to Japan, like I say, it's different. Business is done differently there than in Korea. I think the other thing I find is that they don't understand how important the communication component is. So I'm probably on the phone 2 or 3 hours a night, say 4 nights a week, talking to the people I know in Asia. And if you're a manager, a CTA, or a hedge fund, you tend to ignore that, and you don't call those people and say, well, this is what's new, or you don't build that bond that has to be built to get the business.
I was thinking of a good example as we think about traders that have grown from very small to very successful. And of course, this is an outlier, and it's the easiest example to use. But if I look at what David Harding was managing in 1997, what he's managing today, there's, even as big as he is, there are so many lessons for would-be traders to look at what he's done. He's done a lot of writing. He's done a lot of marketing. I think he takes any stage that's given to him, which I think is brilliant. If someone gives him a microphone, he will go there. He doesn't seem to perceive himself as being overextended. I think that's just all smart stuff. And then I know some smaller traders, perhaps under 50 million, under 20 million, and I think they just sit in their locked up office and just imagine that it's all going to come knocking on their door, when it's pretty easy to see that the biggest in the industry don't do that and never did that.
I couldn't agree with you more. I tell people that all the time, that there's a lot of marketing you can do that doesn't cost you any money. Write some articles that are more macro articles, not talking about your specific strategy. And the industry publications all need articles. And you can get someone to publish your article, whether it's Futures Magazine or some comment to Opalesque or John Lothian's newsletter. And you build up your presence, and you add that to your portfolio that you give out to potential investors, and it adds credibility to what you're doing. I think the other thing I see is that there's a lot of managers who have a lot of money under management whose performance is purely mediocre. And yet there's a lot of people with not much money under management who have great performance. And the difference is the quality of their marketing and how aggressively they market.
I know that strikes some people wrong deep in their gut, but that's the way of life, isn't it?
That is. And, it's a great industry, as you know, that people are more than willing to help other people. It's almost like, with a few exceptions, competition isn't an issue. Introductions are always easy to get, but you still have to follow through with them.
Oh gosh, I still remember back in the day. I think actually the very first person that really gave me some time was Peter Borish, and he just gave me all kinds of insights.
Peter is a great guy, and Peter, as a matter of fact, are you familiar with Peter's new company?
We've exchanged a few emails. I think I'm going to have him on the podcast again to discuss.
Yeah, he's great. And what Quant Capital does is they've got kind of a modified approach for algorithmic technical traders. And what they do is they start out, if they see someone they like, they start out with a kind of proprietary capital approach where they'll give you money and you trade, and it's a 50-50 split on profits. And then if they like that, then it morphs into almost like a third-party marketing approach where they go out and raise capital for you, provide you with infrastructure. And I want to say, I was with Peter a couple weeks ago, I want to say they've got $4 or $5, maybe $600 million out there now with various traders. Yeah,
that's substantial. I mean, that starts to be a number pretty quick. Yeah, Peter was on the podcast once before, and he's recommended some good guests, so I definitely want to have him on again.
Yeah, well, Peter, he spoke at our New York conference, and we're going to have him down in Florida again because he's a great speaker, and he's got that wealth of knowledge, and he knows the history of the industry, and he's willing to help people.
Let me shift slight gears on you to a subject that is perhaps not the best, but I'm curious your perspective in how these events went wrong, perhaps, if there's a big picture parable that you can give, and have we come out on the other side? And I'm specifically talking about Refco, MF Global, PFG. These are aberrations that have really damaged the Chicago futures brand. I'm wondering how you feel about those particular events. We don't have to go into any of the details, but just overall big picture. And has the confidence come back, or has something been shifted?
Let's see. Are you talking specifically for the futures industry, or just for managers?
For the futures industry.
I think what happens is overall the futures industry has not done a great job historically of promoting itself properly. So that if you go back and you look at the equity markets going back to the 70s, the way the New York Stock Exchange promoted equity markets was as a legitimate investment vehicle. And I think if you look at the futures markets, in those days the big exchanges for supported trade and the CME, their promotions had more to do with individual contracts. So let's promote the new wheat contract or something like that. And as a result, futures never gained the same credibility as equities did. And I think that still exists today, even though I think the exchanges now are doing a much better job of pitching futures as a legitimate investment vehicle. I think that carries through to also managed futures. I think most CTAs make a mistake by pitching themselves as a CTA. They need to go pitch themselves as global macro traders or something like that. And they need to look more like hedge fund managers because that's where the bulk of the assets goes to. It did hurt the futures markets, I think, MF Global and PFG, but I don't know how you would have prevented it. All of those things that happened, a crook's going to find his way to get in there, just like a Madoff.
Yeah, and I think maybe that's interesting is that perhaps Madoff had less of a stain overall on the equity trading space than perhaps those events did on the futures trading space, which, again, comes down to marketing. You have to get out there and point out, hey, hold on, that's...
Well, Madoff was a guy. I'd met him 3-4 times, and he was the perfect marketer. I mean, he was sincere. It was like being with your grandfather.
Was there ever anything on the hair of the back of your neck with that guy that just said, oh man, there's something doesn't seem right here? Making 1 or 2% every month, no volatility on the downside. Did anything ever strike you, or just kind of didn't really think about it like that? Most people didn't, obviously.
Well, Well, I don't have much hair left on the back of my neck anymore. But the hair on my arm stood up, and I declined to do anything with him. He wanted me to help market, and I just didn't have any desire because I didn't think it was.
You felt something.
Yeah, it just wasn't. It wasn't a good feeling. And I think the major thing that's changed with all of us is electronic trading. And a lot of the profits went out of the futures markets, or out of the futures brokerage business, and that's why the contraction in that business. It's a huge capital investment now to be a futures broker for back office, IT support and that. The cost of capital so if I'm a brokerage firm, a futures brokerage firm, and my said capital requirements are my internal capital requirements are 7% of the brokerage of the said capital that I have. I mean, you still have to come up with that capital to stay in business, and it's a big expense. And with commission rates shrinking, it's hard to do it.
You know, Bucky, we were talking about marketing issues with perhaps startup managers, and we were both kind of giving them a little bit of the third degree that, hey, you need to do better at marketing. In their defense, and I've heard this several times, and I'm curious to your opinion, regulation. I mean, so many small managers really feel burdened by regulation, and it's like if they want to change their website, they're at the mercy of 20-something NFA, recent college grads that make them run through the mill to get like a couple words changed on their website, and literally things that have nothing to do with either the performance, the description of the trading program. And so it seems like there's some bureaucratic red tape there for the small managers. Is that a fair assessment?
Yeah, I think it is. But then again, if I would go to those same small managers that object to that, and I'm not defending those regulations because I think they are a big barrier to entry. If I was to talk to those small managers, I would say, well, do you check the NFA bulletins each day to see when regulations are going to be input? And when they are input, do you write a letter to the NFA giving your opinion? And I would guess very few managers ever do that.
You're basically saying if you want to be in this game, you got to play the game.
If you want to be in the game, you got to play the game. You've got to know what you're doing, and you've got to be aware of the regulations. It's your business, so you should watch it. And when you asked me earlier about being involved in the business, and that was one of the reasons why I got involved with the FIA. And originally, when the NFA was being formed, there were no seats that were going to be given to CTAs and CPOs. And we were able to get, I think at that point, 3 seats for CTAs and 3 seats for CPOs on the board.
Hey, quick big picture question.
Mm-hmm.
What's the assets under management in the quote managed future space right now? Do you know off the top of your head?
No, but let me see. I can pull it up. Ask me another question while I pull this up.
So let me talk about the idea of so many there's plenty of traders out there that figure out how to get that initial capital, either their own capital, they've got friends and family, they can put together 5, 10, 15 million bucks and they're off trading. But there are some bright guys out there, some women in their 20s, maybe early 30s, and maybe they've got a good trading approach. They've really done their homework, but they really have no access to capital. You mentioned Peter's venture, and I'm curious to learn more about that too, but I'm just curious from a big picture perspective, the smart, well-researched trader that is just really in desperate need of seed capital, how do you guide somebody that comes to you like that? Do you just say, hey, you're going to have to do the friends and family thing, or are there other ideas that you can give those types of people?
I think part of it is, like I say, you have to write a business plan. You have to know what your budget is for marketing. You have to know how much time you can be on the road. What we see is that at the conferences that we have, the emerging manager forums, that the people just are not very good at marketing and not very good at networking. And that may be because of their backgrounds. They just don't know how to do it. But there's plenty of capital sources out there that are looking for emerging managers that are quite large and that are willing to help. And you just have to somehow figure out how to get out there and how to network with them. There are some incubator funds out there that will look at you. Some of the basic things like, put together your disclosure document. And so many of the offices out there now are paperless offices. You put together your disclosure document and you put that on a flash drive with your information that you normally give out, and you give that flash drive to the capital source you're looking at. The other thing that happens, I think, a lot is that people that look at emerging managers, one of the things they want to look at is sustainability of the business model. So that's just as important as how good the trading system is. So somehow you have to make yourself look like a business that's going to survive either through your business plan or whatever it is, because that's a component that allocators look at. Now that you say that, let me make one more comment. The comment is that if you're looking at your list of leads that you have, or your universe of names, what you have to do is you look through the universe of names and make your first cut. And if it's 200 names, how many of those names will allocate to emerging managers with your trading strategy? And then you go down and you also then look at those same names that you've now ranked by how many will give to emerging managers. And you then say, okay, how many of those do I get along with? If I don't get along with them, then they need to rank at the bottom too, because there is, we talked earlier, there's a relationship component involved.
It's not all money. There's a personality thing. If someone that you don't like gives you money, there's already a problem there.
That's right. There's a guy named Brian Johnson. Do you know Brian?
I do not.
Okay, so Brian has a program where he helps guys with marketing, CTAs and hedge funds, and he did a survey, and this is kind of interesting. I ran across this while I was looking for your numbers. 61% of new managers have no marketing plan. 76% tap out their network of potential investors. They go through them all in their first year in business. And 89% fail to reach $100 million in assets under management.
Food for thought. So as you lay those numbers out, 61% no marketing plan. My thought goes to those in-person events, and clearly you're involved in in-person events today. So a good many of those new traders, they might spend the money to come to the expo, kind of to talk, meet and greet, stuff like that. But clearly a lot of them don't have marketing plans. And this might sound silly, but what kind of advice could you give to the introverted trader who might not really have the social graces down and comes to these events and is a fly on the wall but doesn't get engaged? Like, what's a good opening way to get engaged? I remember back in the day, all I did was I walked straight up to people like Peter Borsch and John Henry and said, hello, my name is Michael Covel. I think that's typically the best approach, but I'm curious if you have any thoughts about working one's way in when you don't know people.
Advice for people. You just have
It's natural to you. You can't even think about it. You're so used to it.
Well, first you have to get to the right venue where you can meet people, where they're there to meet managers. So, for example, our conferences, which are geared towards newer managers, about 50% of the people are there are capital sources. They're legitimate capital sources. They're there looking to meet emerging managers because they feel those emerging managers are a source of alpha. So you want to pick a venue like that rather than going to a conference where you have a lot of big allocators there, but they're not going to be interested in a newer manager. They're more interested in established managers because they don't want to allocate less than $100 million at a pop.
Yeah, it's a good point. Don't waste your time trying to compete with the same funding sources that a Campbell or a Winton or a Graham is going after. You need to look at other sources of capital.
Yeah, and the other thing I think is that if you look at, there's a book, there's a woman who's spoken at our conference named Lita Citroen, and Lita has written a book about how to brand yourself differently, how to stand out. So if you go to a crowded space like a CTA space, and you're at a conference, and everybody at the conference is pitching some type of trading system, all of the PowerPoints look about the same. All of the pitches look about the same. Most of the managers even look pretty much the same. Somehow you have to figure out how to differentiate yourself. So in our case, if you're in a breakout room that you've chosen to take where you're going to put on a half an hour pitch about your system, don't use a PowerPoint and flash it on the board, because no one wants to look at the back of your head while you're going through the slides. Sit down with everybody and do an informal discussion, and that'll make you stand out. So Lita wrote a book, and it's on Amazon. It's a short book. You can read it in 3 or 4 hours, but it tells how to differentiate yourself, how to construct your elevator pitch in that first minute or two so you get the basics out, and how to make yourself look different than everybody else that's there.
You know what's been fun about this conversation today, Bucky, is I think if we took out the words trading and futures, managed futures, CTA, I think people, if they're listening carefully, even if trading is not their world or their interest, the insights that you passed along are universally applicable. This type of thinking is good for any would-be entrepreneur.
I think so. I agree with you. So, but I did find some numbers so that this isn't exactly what you were asking, but it was another question that someone had asked me. At the end of second quarter of 2009, there was $1.3 trillion in hedge fund AUM. At the end of quarter two in 2013, there was $2.41 trillion in AUM in hedge funds. That's a growth of 85%. During that same period, assets for CTAs only increased 71%. So we haven't, as an industry, we have not kept up with the growth that the hedge fund industry has experienced.
Well, and like you make the point earlier, too, I'm not so sure, as you mentioned some of those early pioneers in Jack Schwager's books, some of those traders in Jack Schwager's books were effectively trading futures trading systems, but they never called themselves CTAs or managed futures. And so, once again, the marketing and the positioning is very important. I think people have to look at the full history of how these things have unfolded. And I think you make a good point about the global macro and not necessarily having some allocator immediately draw a conclusion just because you use a certain phrase like CTA or managed futures. It's complicated, but everyone's got to make their decisions and dig in.
Well, I think you're entirely right. If you look at the people that have grown significantly, that have AUM, Ken Griffin at Citadel, Ken Tropin, Graham, Paul Tudor Jones, any of those people, Tewksbury, you almost see David Harding, who you mentioned earlier, of course, you almost see a common thread in there. And that is, as they've grown, they realize futures only cannot handle the capacity they have to throw at the markets. So they've been forced to look at other areas where inefficiencies exist in the markets. And then they've also, as they've grown, they brought in a lot of help, a lot of smart PhD types. So their infrastructure now, their human resource, is the people that they've hired that look all over in all different markets for inefficiencies, and then they shift the assets they're managing from single markets that they might be trading to another market. And not a lot of people are able to do that. And
there's no doubt our conversation today is an interesting conversation in the sense that it really is for managers, the individual trader trading his own account. There's less for him in this conversation. But I think for those individual managers that want to go from small to go to big, you just got to do your homework. You got to get out there. You got to play the game. You got to get into the game. You got to market. All the points you've been making, I think, are great. Hey, I appreciate you taking the time today. Listen, Bucky, where's the best place that people can go to check your world out?
Well, the website for the conference is ctaexpo.com.
Well, that's simple enough.
Yeah. And hopefully we'll have you speaking at the one in Florida in December.
As I promised, I will check the schedule here and see where the plane ticket has me leaving Asia, and I'll circle back. But if I'm on the East Coast, that'd be really easy to make it down to Miami. You know this part of the world that I'm in right now, so sometimes it's hard to let its grips let go.
What and where you live or what you do, you're cognizant of the distances. People in the U.S., I think of Asia as Asia, and they don't realize that a trip from Korea to Singapore is a 7-hour flight.
Yeah, it's a hike.
The distances are huge.
For me to get out of Saigon or anywhere in Southeast Asia, Bangkok, Singapore, and to get back to the East Coast, either way you go, either east or west, is about 20 hours of airtime. Airtime, not taxi time, airtime.
Oh, no, I know, because when I'd be in Singapore, it's 24 hours to get to the West Coast.
Yeah.
Even if I ended up going through L.A., it's still a 16, 17-hour flight and another flight to come from L.A. up to San Francisco.
Hey, listen, it was good chatting today.
Yeah, and let's keep in touch. And, let me know about Florida.
Hey, Bucky, listen, it was good chatting. And
all right, my friend, have a good evening, and don't get wet in all the rain.
Thank you, sir. See ya. I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.